In today's video, I will test the best simple trading strategy for beginners that no one ever told you, with the goal to find out how much profit we could potentially make with it after 100 trades. For my backtesting, I will set my account size at $1,000 with 1 to 1.4 risk-reward ratio. The website I'm using for testing strategies is called Trader Edge, and it's officially the best backtester out there. Thousands of new and professional traders are using Trader Edge to get an edge on their competition. You can save so much time by testing strategies with Trader Edge. All you need to do is to set up your initial account size and the profit and loss per trade. Trader Edge will give you all the information you need about the strategy, such as the win ratio, the profit and loss, the profit factor, and more. You will also find some other useful features on their website, such as the position size calculator, which can be really handy for those who trade forex and commodities, the profit and loss calendar, where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can find and download some super accurate tools for TradingView and MT4 platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem, you will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they will throw in 4 pre-made high-quality strategies that have $100 value. So that's over $470 worth of bonuses, all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is literally no risk at all. So go ahead and check it out. I will leave a link in the description below. Alright, we're currently looking at the price of GBP USD on a 5-minute time frame, and this strategy consists of only one indicator, which is called the Relative Strength Index. And now we need to change the settings on this indicator. So first we're going to change the RSI length from 14 to 10. And in the style section, let's remove this RSI based MA. Also, let's get rid of this middle band and the background. Next step will be to make this RSI line a bit more visible. Also, in order to stay consistent with our stop losses, we need to add another tool to our chart, and this tool is called the Average True Range. The ATR measures how fast the price changes per one candlestick. This is a really useful tool and it will make our backtesting more accurate. Okay, the setup is ready, now let's understand how to trade with this strategy. Alright, so here are the rules for entering a long position. First condition, the price action has to be making lower lows. Next condition, the RSI has to get into the oversold area. This means that the yellow line breaks below this 30 level. And as the price action is making lower lows, the RSI indicator has to be making higher lows. The RSI higher low does not have to be in the oversold area. It has to be positioned above the 30 level. Okay, we see the conditions are met, and now we're going to be looking for a candlestick pattern to enter a long position. If the candlestick that makes a lower low on a price chart is bullish, then we're going to be waiting for a second bullish candlestick that would close above it. But if the candlestick that formed a lower low is bearish, then we're going to be waiting for a bullish engulfing candlestick that should form after it. Okay, here we see that the lower low was formed by a bullish candlestick, and all the conditions for entering a long trade are met. We're going to place our stop loss at the distance of 2 values of the ATR. We see that the current value of the ATR is 0.00049. This means that our stop loss will be set at the distance of 0.00098. In terms of take profit target, the creator of the strategy mentioned that we should place it at 1.4 times the risk. Okay, we can see that the price action hits our take profit target within 10 minutes. Exactly opposite is true for short trades. First, the price action has to be making higher highs. The RSI indicator has to get into overbought area. We also need to have a bearish divergence on the RSI where the indicator is making lower highs. So the price action is making higher highs, but the indicator is making lower highs. And now, very important rule, the second RSI peak does not have to be in the overbought area. It has to be below the 70 level. Okay, once the conditions are met, we're going to be looking for a candlestick pattern to enter a short position. So if the candlestick that forms a recent higher high is bearish, then in order to enter a short position, the price action has to form another bearish candlestick that would close below it. If the candlestick that makes a recent higher high is bullish, then we're going to need to have an engulfing bearish candlestick that would form right after it. Okay, we can see that our conditions are met and now we can safely enter a short position. Just like with the long trades, our stop loss will be set at the distance of 2 times the ATR. The current value is 0.00142, so our stop loss will be set at 0.00284. And we're going to be targeting 1.4 times the risk. We see it took a bit longer for this trade to hit our take profit target, but eventually this trade turned out to be successful. Obviously this strategy is a bit different from the ones that I usually post on this channel. It's mainly designed for people who trade reversals. I mean, we can clearly see that we catch in tops and bottoms. I'm not saying this approach is wrong, but it does involve more risk. Okay, let me give you a couple more examples. So here we see the price action is making higher highs. The RSI indicator got into the overbought area, and it's also making lower highs. Also notice that the second high is below the 70 level, which is good because it does meet our conditions. Also take a look at the candlestick that's making a higher high. We see it's bullish. So in this case, we need a bearish engulfing candlestick. We see the bearish candlestick was formed, and this is going to be our final confirmation. Now we need to determine our stop loss distance. Okay, here is an example where you wouldn't have entered a trade. Here we see the price action is making higher highs. The RSI got overbought and it's making lower highs. But if we take a look at the candlestick that formed the recent higher high, we see it's bearish. This means that the very next candlestick has to be bearish and it has to close below it. In this case, we see the rules are not met, so we're simply gonna skip this setup. Here's the same scenario, just for a short position. We see the price keeps making lower lows. The RSI got oversold and now it's making higher lows. The candlestick that formed the recent lowest price is bullish, and as we all know, for a long entry to be valid, we need to have another bullish candlestick that would close above this one. In this example, we see that the second candlestick was bearish, so we would have simply skipped this trade. Okay traders, I hope you have understood the rules for this strategy. If you want to see some more examples, please check out the original video by the trading channel. Okay, now let's do our backtesting and see how much profit we could potentially make with this strategy after 100 trades. Alright, so the backtesting is finished and here are the results. The win rate for the strategy is 53% and we increased our account size by 67.21%. I found those 100 setups within 4 months, which makes an average profit of 0.5% per day. The profit factor is 1.58 and we had 4 consecutive wins against 5 consecutive losses. To be honest, I'm not quite impressed with these numbers. The strategy is showing average results, but for a reversal strategy, these numbers are pretty good. I had an idea to replace this RSI indicator by the MACD with divergences. And this indicator basically identifies bullish and bearish divergences, and I think it's doing a pretty good job. I'm not sure if it's better than the RSI, but at least you spend less time looking for those divergences. There's also another indicator you can try for finding divergences, which is the Commodity Channel Index. This is also a pretty accurate tool, and as we can see, it spots divergences really well. So yeah, I highly recommend you to go ahead and backtest all these strategies, and if you find a really good one, please let us know in the comments. By the way, if you want to see my best indicator strategy on the channel, please check out this video right here.